Hello, traders. Everyone ready for the Consumer Pain Index? Raise your hand if you are. I know our team is, because there's so much experience on the team. We've seen everything. So we know everything and anything can happen. Good morning, team. Who's around?
Good morning, morning.
Good morning, everybody.
Good morning.
So let's start with Kman.
Buddy, hi.
Hi, buddy. Just a little more downside follow through in euro. I'm tempted to look for a place to buy it. Am I crazy?
You need slightly weaker CPI for that in the US.
Okay.
Yeah, I reckon the how shall I say, the rebalancing of overly bought euro may
Continue.
be kind of done when we look at some of the latest flows. But it's
Okay.
going to be a binary event for risk this afternoon. If you get a mildly lower number, your euro dollar will probably find support, but then probably euro crosses will remain under a bit of pressure.
This is a pretty big level, don't you think?
It is
109.40.
It is, but it's so close that even coming in as expected on the core or a tick higher could send it easily
lower,
70-80 points lower. Yeah.
So maybe what you do is you wait for it to take out the support level and all these stops, and then get long if it starts trading back above it after it's done its work.
Yeah, that is one thing, and then you keep an eye on those euro crosses if it's a real if it's a painful one, painfully high. There's going to be some perverse effect, I think, on some currencies, euro and yen being the probably the most perverse currencies that can trade. So on a really high one, euro crosses should actually bounce, and other currencies may suffer more. The Aussie, the Kiwi, sterling, Canada, for instance. Yen on a that's actually yen is not an easy call because
it's having trouble at 35.
Yeah, but we're turning around, right? We are not picking really a side there. If you get a high one on this CPI print, we're probably going to trade higher, but then depending on how much it overshoots, risk can take a knock on the head, and yen maybe struggle a little bit to get higher, right?
Okay.
I'm really I prefer trade Aussie, cable, Kiwi, a bit of mix, bit of rand perhaps on or even China on these numbers than euro or yen, to be fair. Those ones I'd rather trade crosses than straight versus a dollar.
I think this is the most important chart in the cosmos right now.
Yeah.
So, bonds stabilized last year, and we've been moving sideways and have failed to break out 3-4 times. I drew a little uptrend line. They're coming in about 70 ticks better, 103.76, but it's on the verge of a breakdown or breakout. It's compressing. I want everyone's guess. Which way do we come out of this formation? Let's start with Stel.
Which way out do we come in this formation? That's a tricky one. I would suggest that this is a bearish consolidation, so I think we go lower.
Okay. And you're wrong. So you're wrong over 109.50, or maybe even reverse out.
109.50, I think it's gone after that.
Yeah. Okay. Ryan, you want to toss a coin in the air right now?
Yeah, can I have a double-headed?
Toss your bull bear coin.
Can I have a double-headed coin? And
you know what?
I'll tell you what.
I worked for a commodity company that had a bull bear coin. You don't know what a hit it was. Everyone wanted that coin. You know, it's not.
I'll tell you what I do, Dale. Heads I win, tails you lose.
Man, all right, I'll take those odds. So besides you thinking I'm a pigeon, which way we coming out of here for yields? I think you would probably say upside, Ryan.
No, I'm going to.
That means lower yields.
Are you talking about just the CPI?
I'm talking about this chart that you're looking at.
Yeah, but for what's the kicker? The CPI today or the debt stuff?
I don't know. Maybe it'll take it out. Eventually it's got to come out of this formation, right?
Yeah, that's a tough thing. If it's based on CPI, then if it's stronger, then obviously we're going to get a jump in yields. But the tricky thing with this is that yields aren't just moving on CPI; it's moving on the debt stuff. You know, we're seeing a big lift in yield 1 month, 3 month, and we're not seeing the same in the longer end. So if that's covering 20 years, we're looking at the far end. I think maybe then we're going down based on the Fed moving to the sidelines.
You know, what's interesting is if you go like short term, we could even look at weeklies, that both the junk and corporates have better chart structures than sovereigns, and sovereigns used to be best of breed. So the market, the sovereigns are out of favor. People would rather buy junk, high yield stuff, high risk stuff.
Yep.
Which seems less risky than buying treasuries right now. First time in my career I've ever seen that. So, and I've been doing it a couple years. So, I think it speaks to whether, all of us think that, they're going to have another meeting and they're going to work it out. People are voting with their pocketbooks and they're pretty nervous about it. But you could tell by the way they're positioning, and, the 1 month bill is in so much more demand than 3. And in the old days, you didn't buy 30-day bills if you wanted to use them for margin. You could have an account, a commodity account in the old days, and buy 50 grand worth of 90-day bills, and that was your margin. So instead of paying on your margin, you got paid with your margin money. So people don't even want the 90s. I've never seen that.
No, anyway. No one wants to be left holding a bag of poo if this is the time when there is a big default.
Yeah. Anyway, how about go ahead?
I'm sorry. I'm just, Ryan, did you just say holding the bag of poo?
Yeah.
Winnie, he was talking about Winnie the Pooh.
Yeah, of course. And good morning, team, by the way.
Hey, guys. Blake.
Hey, good morning. So Ryan, I love your post that you just put up on the debt ceiling, by the way. It's a great post on gold.
Thank you.
Did you share that with the everybody listening in? You should put that in the webinar chat that we have.
Yeah, let me do that now.
Yeah.
Bang that in there.
Sorry, I'm going to let everybody else speak.
I
couldn't stop, but I had to giggle there at the poo. All right.
So in your blog, Ryan, you're talking about the PMs?
Yeah, just the gold. I think it might be the cleanest debt ceiling trade.
For a short? Or just
we've got this 2075 level, which is potentially a big triple top. You had it on the wider chart there.
I'll show even the monthly. It's there.
Yeah. Okay. And one thing I like is nice, clean charts to trade. This is one level. Call it 2075, 74, whatever you want to call it. But it's one clean level. You know what you're doing. It's either going to hold it or it's not going to hold it. And there's enough there to say that if it breaks, it's probably going to have some legs because there's probably going to be some big news behind it. So, doing a buy stop just above should get you some decent money. But if it holds and the debt situation is resolved, I think this one is partly up, or a big part of the reason why it's higher is that asset switch that you were talking about over the debt stuff. You don't want to be in bonds. you need to stick your money somewhere else, don't you? Somewhere safe.
Yeah.
And
Look
so
at
if
the
there's a resolution,
divergence.
resolution, we're probably down to 1900.
Yeah, maybe even 1840.
That'd be nice.
So anyway, look at that glaring divergence on the monthly. I mean, you can't trade monthly divergences without having the Fed's checkbook. Don't try it. Daily diverging, that's a weekly, and the daily did too at new highs. I mean, it's a pretty classic example, but this was taking into account the Asian spike, which, a lot of people just want to ignore it and say it didn't happen. My buddy Jim says, no, it didn't happen. So, it happened because, I've seen major lows being made in Asia. And the reason I remember it is I was long during a gold crash. I mean, it was 40 lower, almost 50 lower. I bet Blake remembers that day. And Hong Kong, somewhere in Asia, they put the floor in and started coming back. That was a major low.
I do remember that. It was that was actually I was in the dining room with my kids watching it on my laptop at the time. Yeah.
Yeah.
Anyway.
And so why if that was a low, are people discounting that maybe we were already at 2080? What do you think, Blake? I mean, aren't you hearing that? I know Jim Welsh, I watched your interview with Jim this week, and he poo-pooed that it went to 2080.
Yeah, I think it depends on the platform. I mean, my feed showed it, but some brokers I was hearing that didn't report that was traded. Regardless, I think it leaves a big risk to the top side. So I think that Ryan's idea of being short gold makes a lot of sense. Look, the debt ceiling is going to get raised, and even if it's a temporary fix, it's going to get raised. We all know it. You know it. I know it. We know it. At least until September. So, stocks are probably going to recover as a result. Gold's probably going to get sold, and that's just plain and simple. I think, and I think the risk is very well defined, especially today. If you get a number that can push gold lower, which would be a stronger CPI data. So I think if we get a bit of a hot number, or at least a little bit better than expected, you're going to see the markets come on down.
I just wanted to ask Ryan why gold over silver as far as the short.
The text, really. It's a text, so it's really about that triple top.
Okay.
Silver's a little bit more messier, as Dale mentioned this morning. But it's purely about those techs.
I guess Dale's asking because gold does one, silver does two, right? Same as Bitcoin and Ethereum. So if you short one, if you're bearish in general, might as well short the one that moves more. But anyway,
but I was just curious. I mean, the gold silver ratio. I don't know what to really make out of the chart, and we are putting in higher lows, so I figured we could at least rally back to 85. That would make silver the better short anyway. But I've been wrong on the gold silver ratio as much as any other instrument that I trade.
It's a tough one, man. It's a tough one, this ratio. I see this as a bearish consolidation, but like you say, it will take one, as we said on the flow show earlier, if there's a beat on inflation, so if the inflation print is higher by, say, 0.1 or 0.2, I think the reaction is going to be a lot bigger than if it's lower by 0.1 and 0.2. And that's because the trend is going to look like it's changing. That's the risk. The trend so far over the past 7-8 months has been lower, particularly on the headline one, not the core.
Yeah.
The core is a lot stickier. If that changes, then there's a lot of trouble. I think a lot of the cuts priced into the next 7-8 months need to be taken out.
Okay.
Right.
And then we have a follow-up PPI tomorrow, right? On top of it.
Then we go PP tomorrow,
I think it's going to be more important than CPI.
Yeah, I mean, Ryan, I 100% agree with you, actually. I mean, because that component, remember, that factors in, that's going to factor into CPI in the months ahead. So if we see like that, stronger tomorrow, I mean, that could be a real, that everybody will start thinking, shoot, exactly what Stelios was just saying a moment ago. We're not going to be seeing cuts later this year. If the PPI is much stronger. Because again, that sort of production level, and it gets factored in, it gets pushed out to the consumer level. Because I mean, margins are so squeezed as it is from producers, and how's that going to eventually? It's gonna work in at this stage in the game much higher into the consumer. So
but it can also flip it. It can also flip it. If we get a strong CPI today and then we get a negative year-on-year PPI tomorrow, that's going to flip everything right around.
Yeah, that's true. That's true.
This copper is looking, tried to rally back to the breakdown. This time it's not getting back above the breakdown.
Yeah.
This is a negative economic signal.
Yeah. Do you mind if I take the charts from here?
No, go ahead.
I'm glad you brought that up. I want to talk a little bit about copper, and I want to talk a little bit about like the euro, where it's at, and the Aussie too. I mean, let's talk about that for a second, because the Aussie, I want everybody to understand the Aussie is really up against a pretty key resistance level. If you take this high from the head and shoulder pattern, right, down to almost the 618. Well, you could argue that that's basically the 618 is where we went to. We can't get past the 38% retracement, which is basically 68 cents. And I'm going to tell you this right now. I am an Aussie bull, which I haven't said in a long time. I'm an Aussie bull above 68 cents. I mean, that's the big breakout point. You can see multiple highs. I mean, you have to just imagine if the Aussie is breaking that, we are going to get some massive recovery. People will start, talking about China, blah, blah, blah. But Dale, you brought it up, and it's something I really wanted to talk about today is copper. Let me go ahead and find, there's my chart. Yeah, I mean, how ugly does that chart look, Dale?
Pretty ugly. Yeah,
it does. I mean, imagine if we take out the 200-day moving average. I mean, you can you just take this horizontal, support here. We start taking out the 200-day moving average, and that's going to look downright ugly. Yeah. And I know a lot of people are very bullish risk here. They think that, stocks are going to move higher. We're going to get the debt ceiling raised. Earnings haven't been that bad. We're almost past earnings season, but man, if copper starts breaking down, I mean, how do you reconcile that with a bullish, risk idea? I don't know. Ryan, you have any thoughts there?
Yeah, no, absolutely what you're saying. It's all about, as Mark said, it's all about the China recovery trade as well. So yeah, it's going to have a big say if everyone's heading towards these recessions that people keep going on about. We're seeing it in oil. Oil can't hold a gain. Commodities can't hold a gain. That's going to drag the commodity currencies. So while you're bullish on Aussie, you've got to keep one eye on those.
Yeah. Stelios, do you have any thoughts regarding copper here and why it looks so horrible?
Well, I think copper and the Aussie are equivalent to China. I mean, I think that's almost a given. So if you ask me, give me an indicator that shows how the global economy is doing, I'll say, look at copper, maybe oil as well. But I think this is showing worries over the global economic environment, and it's really not a pretty place at the moment. And I don't think copper has anything to do, with tech companies in the US, which are, let's face it, driving the major, indices, right? You have Meta and Google and this and that. I mean, copper doesn't play that big a role in there, but the general worries about the state of the global economy, I think that's what copper is telling us, and it's kind of right at the moment. So
all right, well,
I don't know what to do with it. You asked me to buy it, to sell it. I really don't know what to do with it. But,
no, I don't think that's it. I think you framed it perfectly, just to explain to everybody the problems that you have chasing risk higher at this stage, knowing what's happening in, with the doctor, if you will. You know, Kman and I were just talking about this in the chat room. And Kman, good morning. This is one that's really on. I was telling everybody in the whoops, I didn't not mean to do that. If you're in the ForexAnalytix chat room, this is what the ForexAnalytix chat room looks like, guys. Just FYI, we were just having a conversation regarding who put He-Man on there. Simon. Oh, anyway, just kidding, Simon. I love the GIF. The Giphy. We were talking about just a few moments ago about the Rand here, wherever it is. Here's the Rand, and we were just talking about this and not getting my bids filled here. And by the way, that's again the ForexAnalytix chat room. But hey man, why is the Rand popping higher like this?
Because they're again talking about load shedding and blackouts and stuff like that. It's really
it's a disaster.
And I reckon it's painful over there. That is one, and then I reckon you have the effect. You remember we were talking about this MEX Rand for a while.
Yeah,
and then it had a big correction at one stage, but now it seems that they're back on firmly on that train as well. So it's a bit of part of everything. I was looking at flows, but actually over the last week or so there haven't been that many flows. So it's really a move that came out of a bit nowhere due to this news. But then if you look at the flows, there hasn't been many flows, right, in the Rand.
Yeah.
So get a number today that would be bad for risk, together with the bad news out there. This could be really explosive, right? And a visit to the prior top there in June 2020, 1930s. It's probably a matter of perhaps even hours.
It's a tough one. It's a tough one to play for a longer period of time. But man, I think you said it great. I mean, if we get a strong hot number and the markets give us a little tits up action and falls on its back a little, I think the dollar Rand could really spike up towards 19. And then it starts hitting that 19 number. That's a big figure. You know, how many stops are trading are above 19 right now? So any buy stops there. So yeah, and look at this huge cup and handle. That's ginormous, by the way, if you guys can't tell. I mean, imagine this thing going to 22. You know,
where's that trend line?
This one?
No, the one making the cup and handle. Where is that right now?
Oh, it's below price. It's maybe 1850.
Okay.
Yeah, roughly 1850. So that's like a dip area that should be pretty well supported, you'd think. And I've as I told you, I've been trying to buy this damn thing on dips like literally all week. I've had bids. You know, when it takes off like this, you put bids below the market, hoping that it might dip. And yeah, that just hasn't happened. My orders come up canceled by the end of the day every day.
You know how they call that?
How they call that?
Dick for a tick.
Yes, I was being a dick for a tick.
Limit orders, limit success.
Nice one. Haven't heard that one.
Simon is Kman. You are called. Simon says you are He-Man. So
wow,
I agree with that.
Yeah,
Kman is also, you go. Seriously.
Hey, look, we got just about 7 minutes until the data comes out. Best ideas. I'll go last. So Dale, what are you thinking here?
You know, I want to see a resolution of that formation in TLT. And
okay, you want to look at TLT, which would be an ETF of the 10-year?
20. It's like
20?
20 year.
Okay. Yeah. Oh yeah, that is the 20. Okay, so TLT. Sorry, I wasn't around when you were talking about it a little bit earlier.
Show the weekly. So it's right on support. But yeah, see that? I mean, resolve it over 109.5 or break down. I think Jim has his stops at 101.30 now on his long. So if we break down, Blake, I don't think the market's prepared for new highs in long-term yields, and maybe we're going to take out, maybe this is a 4, Ellioticians are saying. Even if we do break out, it's still going to be a 4. So maybe it doesn't, and we just make new highs in yields. I think that
sure does look like a continuation at some point. That's for sure.
That's what Stel said. So
yeah, all right.
Watching.
Awesome. Stelios, what's your best idea for today?
Okay, dollar CAD. Take a look at that on the daily. There you go. We touched that support again on a weak number. I think this is going to go, and this has touched this trend line like 6 times. So I think that's going to be a pretty important breakdown. I know it's not, we're about how many pips away? 60 pips away. Okay, but man, if that breaks, look out below. And on the other side, if it's a strong number, a strong CPI, I would look at short-term bonds like go US 1Y, 01Y. Is it 01Y? US 01Y.
Well, I have the 2Y. Do you want
the Y? Go 1Y, 1 year, 1 year. So basically, if it's a strong number, I think we take out cuts, which means short-term rates go higher. And look at that, how it's creeping back towards those highs, which are at about 5%.
Yeah, it wants those highs, doesn't it?
Yeah.
All right, very good. Kman, what's your best idea today? I know you laid out a bunch of ideas in the chat room. What's the best of those 4 different scenarios that you
all
had?
of them? Tell them that, Kman. All your ideas are your best ones.
No, if it's a weak one, I think really the Aussie has a chance to take out the 68. I think cable trades 127 or perhaps above. I think very good for carry trades, so the mix should do really well. If it's a very high sticky one, dollar rand explodes, euro dollar trades perhaps back into the 108 somewhere, but I would be very cautious with risk. I would like to sell a few risk pairs if that would be coming out as well. I think dollar yen hits probably 136, 6.5, and then we reassess.
Very good. Thank you. Ryan, what's your best ideas today?
I think cable. Dale was talking about euro dollar as if it breaks the lows, hits the stops to counter trade that. I think cable might be the one because it's kept its gains through everything that's gone on the last week or so.
I know. And we got the Bank of England tomorrow, right?
Yeah, that's the sticky point. I would be 100% on this one if it wasn't for the Bank of England, but we have got the Bank of England, so there is a risk you get in a dip trade. Maybe it doesn't gain back as much because the market will start taking its chips off the table ahead of the BOE. But on balance, cable's the one I'm looking at today.
How about if we break this 126.80? Well, let's just call it 127. I mean, previous support, previous resistance, current resistance, big old head and mother effing shoulders setting up. I mean, speaking of what happened in Asia, that happened in Asia, Dale.
That's right.
That one right there, that happened in Asia. So, I mean, what if Andrew Bailey pulls the boot out of his butt and starts raising rates aggressively? Do you think that'll happen to curb some of the food inflation? I know you guys all laugh. I mean, don't think I'm funny, but
it's Andrew Bailey we're talking about. Come on.
All right. Okay. So
you come home, Bill Bailey.
I'm just gonna say this. The euro. I think you guys. We all have to watch this. Look at these highs here. Here. Nice little triple top across the highs around 109. 111 basically. If we start breaking through this 109.40, you can see I've got like alarm set up. I agree with Kman. We could trade back in the 108s. I don't think 108.50 is really offsides right now. It's 161% extension of this last move higher. So I don't think this is not doable. I think it is very doable at this stage in the game. The flip side is if we do get, and I'm with you, Ryan, as far as if we do get a weak number and risk rallies, I think the cables just going to squeeze, and I think this is going to catch. It's going to catch a lot of people that are shorting it up against these highs. I don't want to be long right now, but when we start breaking out, you might get a little bit of Momo trade here. And Kman, I agree with you as far as the Mexican peso goes. There has not been a lot that's been able to lift this.
20 seconds.
15 seconds. 15
all right,
seconds.
Whoa, shoot. All right, hold on. Let's do this.
Get clicking.
Thank
click,
you,
click, click.
thank you, thank you. Got the data flash.
All right.
Sorry, I'm not going to be able to get.
Let's see the
core number.
Four
Core number is
handle.
important.
What's
building
yields?
permits.
This is the S&P right here.
Yields are going up.
S&P just spiked
4.9.
higher.
See, I told you, four handle.
Core
number is unchanged.
Yeah.
Wow. Look at that. Hey, and how is it that the cable's right up against the highs there? Dollar yen's breaking lower.
Yields are going lower here, right?
Yields are going lower. Risk is
Dollar's not doing
here.
much. Dollar's not doing much.
But look at I want to go over here to the euro yen.
S&Ps are making the
breaking
most
down. It's trying to break through the support here. God, what do you do? What do you do?
Tough one.
It is a tough one. I mean, you got the Aussie right up against resistance. It's like, okay, well, do I really want to buy it knowing that 68-cent level is right there? I don't know. I don't know. And you got the cable right up into the resistance. Do you want to buy that ahead of Andrew Bailey? What do you guys think about that?
I still think the dollar's going to take out par.
You think
this
so?
Is the window. This is the window for all risk. This last decline in the dollar should be supportive of risk as we head towards 99.5 or so.
Yeah, well,
they want those stops. People have been able to bottom pick at this 101 level for, a week or two. There's a lot of stops under this par 70, whatever it is.
Yeah.
I think they're going to clean them out.
Well, your dollar Canadian
is almost there.
Stelios is getting close to there, but how have we not pushed below it? I mean,
well, we needed a number that was. I mean, this was marginally weaker. I said the four handle, but it's only marginally. So I don't think it's going to be enough to push it below. I mean, I could be wrong, but I don't think it's weak enough. Let's see.
Yeah.
I don't know.
Nice
it's all about stops.
Team.
Like Dale said, it's all about stops. If they want to hunt those stops, I think that's going to go straight through.
Yeah, I mean, core CPI came in 5.5. That's in line with expectations. Well, hell, hey guys, I just want to say thank you all for being here today. Appreciate the team being here. I know Dale, you have an interview coming up. Make sure you check out ForexAnalytix. This way you can be in the chat rooms when all of us are talking about what we're trading, even the trades that we're doing. You can see them in the chat room, not just us. It's all of us are different people in the community, not just admin. We have our general chat room, everything else. To get in the chat room, just so you all know, it's this little button right up here. It says go to chat room next to your icon and your name. Anyway, thanks everybody for being here. We have the Morning Edge, which comes on in approximately 45 minutes. That it's a personal show for the ForexAnalytix crew. So we'll see you guys there. Dale, have a great interview.
Thank you, Blake. And, if you want to be a trader, immerse yourself. Immerse, not part-time. Just dive into it and breathe it. And thank you, Dream Team. Great coverage of CPI. See you guys tomorrow for PPI. And Bruce Fraser, welcome back to F.A.C.E.
Dale, thanks for having me. Gosh, I was enthralled. It's like I didn't want that to end.
What? This coverage? Of
yeah,
the,
no, yeah. It's like what a day to have me on. Jeez.
Yeah, well, it's a great day to have you on because we were getting a little bit micro here, and Wyckoff makes you have to use a telescope.
Yeah. My time frames are a whole lot different, so I'm just warning everybody now. But
okay, Bruce, your work is elite, and if you share your screen.
You got it.
We appreciate you bringing in whatever you bring to us, always edifies us. So looking forward to what's top of mind for you.
Well, and hello to everyone. And Dale, it's just so great to be here. I always have a great time. We're kindred spirits. I have a chart just for you, Dale.
Okay.
Yeah.
The point figure.
But this one here is now it's like I don't trade currency. I just look at the UUP, but I think currency is very important.
Yeah.
This is the US dollar index, and you all were talking about that. And I actually am of the mind that gold really is not so much a function of inflation as it is a function of currency chaos. And
as a monetary metal.
Absolutely. And it really, I think that we could honestly say that we're in a period of monetary craziness. But the chart here on the right, the UUP chart, that's the vertical chart with the uptrend. I just want to remind everybody that Dale and I talked about this chart right when it was throwing over the top there in September, October. And so we looked at this very chart at that time, talked about it being overbought, throwing over. I call it a trifecta because what we had is we had a throw over of the uptrend. We fulfilled a point and figure count, which I don't have that count on here now. And then we had a climax, very dramatic climax that occurred right into the end of the quarter. End of the quarter is so important. So all of these things happen, and Dale and I were talking about that right here. And then you can see what subsequently happened, which was that the UUP, or the dollar index, just cascaded down and out of that uptrend. Incredible volatile period.
Got from A to B in a hurry.
Got from A to B in a hurry. And then what I've done here is I put the gold futures continuous contract underneath just to really illustrate the idea that gold really is a currency based commodity. And you can see that there's really a kind of a mirror image here of gold to the dollar, but the difference being that you can see that gold actually was stronger at the bottom, in the bottom of this downtrending channel, while the dollar was in an uptrend. The dollar threw over the top into a climactic overbought condition. Gold did not get to the bottom of its channel at the same time. Actually, you could see that volatility was diminishing, something we really look for in Wyckoff. And so you could see at the October lows, and then on the test at the November lows, that it was just crowding up against what they call an overhanging supply trend line, that green line. And then it just came screaming out of there. And so here we can see that gold is now actually stronger than dollar is weak, because you can see the dollar is trying to go back down to the area of support, the January lows, but in fact it has not taken out those lows where gold has taken out its highs.
Great observation. So does Wyckoff really talk about comparing things on relative strength, or this is just something that
no
this is your work?
Very big on back in his day, because he was like late 19th, early 20th century. They didn't have relative strength. It's like relative strength, the way that they did it is they did these kinds of comparisons.
Okay.
And this trend line analysis is very much a Wyckoffian technique for trend line and trend channel construction. It's amazing how well it works. And look at how the 2 points that you draw this dollar trend line on, the February and the March lows of 2022, look at how that set the stride for this whole move up. I mean, just think how important those two pieces, those 2 points underneath the dollar, defined the uptrend that went for most of the year, as was the case for the downtrend in gold. So really valuable methodology technique. And so
it's a Biden rally.
Yeah, right.
Everyone thought the dollar was going to get killed under Biden. Still could.
Well, it still could, yeah.
But it had a great rally. Someone once told me that the dollar does better under a Democratic administration.
You can see over here on the left, Dale, that you could take that distribution count and count that. And you see here where I actually just took that chart and added some data there so you could see what happened. But it became range bound as soon as it got into that count area. Now, this whole area where it's been in a trading range could be redistribution for another leg down. And I just think it's, not quite ready to commit. I mean, it could go either way. That's the thing about a trading range, but we always sort of think of a trading range as primarily a continuation.
Well, you
Pause
have
and a continuation.
You have a lot more red boxes than black compared to at the top.
Very good observation. Yeah, absolutely. And so, and volatility is increasing as we go through there. And the volatility, as you point out, is on the downside because of the red. And that is not typically a sign of accumulation. That's a sign of redistribution.
Yeah, I was thinking there could be one more flush. You know how markets like big round numbers, like par?
Sure.
I'm talking Dixie. So, take that out. And let me ask you, do you think about what we're hearing and the noise in the background at times too, Bruce? Like, I've never seen as many articles about de-dollarization for quite some time. I mean, there were, pop singers that wanted to get paid in euros at times, and a McDonald's ad that says the dollar is low. I remember that. They marked dollar bottoms. Do you think that we're getting close to that in sentiment? I mean, even people who aren't in the business will ask me, Dale, what's going on with the dollar? Is there anything I should do? What's your
Well, no question. And of course, what they're seeing is the explosion of the Treasury's debt burden, 31 trillion, something like that.
They don't look at that. They don't look at that. The people, my barber.
You don't think they're concerned about the immense amount of debt? Well, it could be.
I think they're just
I look at that and I worry.
That's what pros do.
Pros. Yeah.
Anyway, but a lot of people without a lot of market knowledge are being peddled fear about the end of the dollar right now. It's happened before, but it's happening again.
And so I don't know how that translates into trading per se, but I do hear a lot of conversation and read things about that. And I think that this seems to be the more that the dollar is weak, the more that imports inflation into our economy too. And so if the dollar does continue to weaken as it has in that last chart we just looked at, we can expect that to translate. And I don't think people necessarily make that connection either, but it's, weak dollar, it does import inflation. So
okay, everyone write this number down, 1841. Because Bruce, what's great about this interview, I see you're that 1841 on the right hand side.
Yeah. Sure.
And using different methods, that's where I want to be a buyer.
Well, that's a 20-month moving average right there. And this is a chart that I've been publishing now since August of 18. I put it in a blog when gold came down to that key support level. And I put there August. And by the way, anybody can go in and read my blogs at stockcharts.com. They're not behind a paywall or anything. Just, go check them out and you could read this. But at that time, I was making the case that we were having a white coffee and last point of support. But the key point I want to make here is that we have massive resistance up here at the 2011 highs. And also we can see where the 2020 highs were also turned back by the 2011 resistance. And here we are again. And I suspect that we could spend time here. I think that the bull, and these are monthly bars. So this, we could spend a few months here. But the bullish thing that would happen is that we just get real dull and quiet like we did the last 2 months and we just stall here and we don't come back into the structure. And that would be, I think, very bullish for gold. And the contrary to that, to return back into the trading range with volatility would, really say that, this gold's really not ready to go anywhere. If anything,
well,
it might even go down.
The prior peak, so maybe people are going to be looking for, they'll look at this chart and go, well, last time gold went from almost 2,100 to 16. But to me, the character of this rally says it's just going to be a pullback, a fraction of what that decline to the left. Even the other one from the high in 2019, that kind of decline.
I'm
But
completely with
I
you
think
there.
1840 is possible if the dollar can reverse from lower levels.
And sort of a Wyckoff rule is 50% or less retracement. Getting back to that 1841 would keep this in the top half of that trading range.
Okay.
Now that yellow shaded area right there is a point and figure count. And so here's that count just to give people an idea of potential. It's not a prediction, it's just a potential. Okay. And here we are, we're back above 2000 at this area, and we could spend time here and the count may grow larger if that can happen. And so if it can stall in this 2050, 2075 area and stall and not pull back very much, or maybe get back to that 1840 area that you're mentioning, then this count will grow bigger. But right now, just the count as we see it, very conservative count on my part, 32 to 3,400. And but we need to take out 2075 and we need to stay above it. And then, so it's, we could be having a conversation about this in 6 months, be pretty much in the same spot. So,
okay, interesting.
Last thing, gold miners, just to show a trading count. It's like I don't spend all my time just looking at monthly charts, but this is just a working. These shaded areas are point and figure counts that I've transposed onto a vertical, so you can see how beautifully this distribution count in green counted down to the area of the lows that we just talked about, September, October. And now we have a count here that counts up 35 to 40. We have now fulfilled the minimum count objective, but 40 takes us back up to the prior highs from April of 22. So that wouldn't surprise me if that wasn't possible, just from a trading perspective. But in the time that we have, I know we're running out. But
no, that's a nice chart. That might be a nice, if there is a pullback, 31, 31-ish.
Yeah, and then potentially the count could be arguably bigger. It could pull back. We could count from the March low over to, say, the May 22 low. That could be a bigger point and figure count that might become available to us. This is a chart I wanted.
Long-term bulls that have a 70 target.
Yes, well, and if we break out in that monthly chart we just looked at with that point and figure, and we can break out and go up to those higher objectives, I would say that's very possible. Maybe, so
on the nice edge. Wow. Okay. All right.
Well, you'll remember the old. Go ahead, Dale.
No, it's all right.
I was just going to say, this is a play on words, because as Dale and I remember, there used to be a very popular futures contract on the New York Composite.
Yeah. The knife. Yeah, I forgot we used to call it the knife. Many have fallen on the knife. Is the market about to get cut loose from people finally starting to realize the old paradigm of a Fed put isn't there anymore?
Well, this is kind of part of this chart, and again, I apologize for pulling up another monthly chart, but
I love it.
So Dale and I were like floating into the business around these first two arrows on the left, in that area. So this is the reality we dealt with in our careers.
I'm looking at my whole life on a chart, my whole career on a chart.
Yeah, exactly. Me too. And
I faded. It's okay. I hope it was less painful for you, because I faded it all the way up.
Well, I could tell you lots of stories.
Anyway, I didn't just buy the spider and ride it for 50 years. Anyway,
yeah, right. So, wouldn't that have been a good idea?
Some people did it. It was just simple. Just buy an ETF.
I did know some of those people. Yeah.
Yeah.
And just pointing out, you can't see it on this chart, but 1971, Nixon closed the gold window. And that was literally the end of the gold-backed dollar.
Right.
And so and of course, we know what happened, and we talk about currency being a tumultuous thing. Well, if anything was tumultuous, I was on an airplane. I won't go into detail, but I was on an airplane flying from New York to Frankfurt, Germany in 1971 at the very time that they closed the gold window. And I landed in Frankfurt, and the world was a normal place when I left New York. And when I landed in Frankfurt, the world was in chaos. The dollar was trash. You know, it's just, the Europeans were just like hated Americans for, closing everything was just tumultuous. And that was one of my early experiences with currencies.
Because I really can't remember that period with clarity. But you bringing this up, Bruce, I know this might be a little off track for you.
Yeah.
But don't you think the biggest monetary story of our lifetime is happening before our eyes with a CBDC? Isn't this as big or bigger
and
than
who
Bretton
can know,
Woods?
Right?
And why is it coming? Why is it called a central bank digital coin when our currency says it comes from the Treasury?
Oh, very good.
So it's kind of like a takeover.
Well, and also they're talking about being able to have people transact business without doing it through banks.
Yeah,
doing it
the
through
Fed will be the
directly
bank.
through the Fed. Yeah, Fed will be
they're
the bank.
They're the bank.
Mm-hmm.
Doesn't it almost make this banking crisis look intentional?
Well, you never let a crisis, banking crisis go to waste.
Okay. Anyway,
to paraphrase.
Yeah.
But
so what's this last chart implying? Are we topping out here? Are the melt up people going to be right about 6,000 S&Ps?
Well, so just to orient us on this chart, 74 low and the 82 low are the classic two. Look at this, drawing the demand line under the market off those two lows on this log scale chart. Look how beautifully that demand trend line worked right to the present.
Yeah.
And every single time we've come down and touched one of these, either the trend channel or the demand line itself, the lower line, it was economic crisis. Yeah. We were in and each one of those cases, the Fed stepped in and went to work trying to reliquefy the system after a tight money environment situation. Yeah. And to get the economy going again, which got the stock market going.
Right.
So we can see the stress right in the chart and how there was attempts to break through the demand line, but V bottom reversed off these periods and got right back above it because the Fed was helpful. The reason I put this last line on the right in the last arrow in yellow is because the Fed here is basically so far just saying, I think the Fed, the last rate increase they did was the last one for this year. That's just, I have reasons for thinking that. I can't get into it today, but at a later date. But I do think that the Fed is basically done. Powell has said we're not going to lower rates again in anywhere in 2023, and so we could very well see rates just steady at these levels for the rest of the year. And but look at what we have going on. We have a Fed that is not accommodative. They're not stepping in, at least that we can see, and trying to support the market here as they did in 2020, 09, 03, 82, and so on. And so the Fed's whole posture is really related. Now, this is through May 2nd, so you can get a little more detail on the very edge of this chart on the right. But and here's kind of where we are in a blow up on the right side.
Like a failing rally. It was a failing rally this
now
last push up.
I think the analog that we're dealing with, Dale, is the late 60s, 70s period when inflation really took off.
And we have a range in the Dow from 1,000 to 600 for 20 years?
Yeah, exactly right. Yes. And so here we are. Let's see if I can draw. So I believe it's possible that we could be this would be a bullish case. Would be to have this go sideways, and the bearish case would be that it goes more like this, and we have support at the 2020 lows, maybe here, possibly here, and this is because of the Fed. The Fed is now dealing with ramping inflation. I mean, today inflation 0.4, I guess it was. And so the Fed's got a serious problem here, where this whole period, when we were like the arc of our careers, the inflation was diminishing after Paul Volcker, and we had inflation coming down every cycle. Every cycle, it was getting less and less and less on our way through. So that's no longer the case, and this is all coinciding with where we are over here.
What a great presentation.
So that's just one that I wanted to show you, and then I don't know how much, we may be out of time, but I did hear a conversation about talking about the bonds. And you know, my career, I worked with Martin Pring for and we still are very close. And he characterized the business cycle as having 6 stages. And I'm not going to I can't get into the 6 stages today, but we've been in a bear stage where all the asset classes, bonds, stocks, and commodities have all been bearish, and that's this yellow shaded area. But I believe that we've gone into stage 1, and stage 1 is defined. In this case, we'll look at bonds over here, that bonds go into their new bull market, which I show here is October of 22. And that this is TLT as a proxy.
Got it.
But
so bullish bonds, maybe they finally act as a haven. If we have turbulence in equities, or does it help the equity market?
It should eventually. Well, typically what happens in a classic business cycle is that you have a low here, September, October of 22. You'll typically get another lower low in stocks. You don't have to, but we may return back down here, but you can't get another lower low. But that could come later in the year, early next year, something like that. And if the analog of the 60s and 70s holds out, we could rally all the way back to the prior highs and then still go down and make a lower low in a gigantic trading range. And so I really think that's possible. And but the whole time, because of inflation, we're losing purchasing power.
Okay. I'm looking for a July meltdown. I don't know what it has to do with debt ceiling that people are cavalier about, geo.
Well,
banks, you know, there's so many things bubbling on the oven. I guess they could all be bricks into the wall of worry that the market climbs, but I think there's a puke job coming, Bruce.
Well, you know, you've always had really good instincts, and I just want to say this one thing. This is just a seasonality chart that I created. And by the way, our seasonality guru, Dimitri Speck, is going to do a free webinar for IFTA.org, which is the big international Federation of Technical Analysts, completely free. Go register, join us. And but all I've done is I've taken the years that are pre-election years. And so these are all the pre-election years going back 73 years, and just showing the seasonality of the pre-election year. And look at, there's really definitely a family resemblance between what is going on with the NASDAQ and seasonality, but we get a little weakness into the mid part of May, and then we have a rally into the end of the second quarter into July right here, which kind of fits with your scenario, and then that trading range for really the rest of the year. But you could be right. You could be seeing what you're suggesting could happen, could very well be the way this works out. And so
I've been wrong a million times, but
yeah,
I just I can, if that 4,200 level is universally embraced, we get a rally over 4,200, everyone will be bullish. So
right.
We'll see what happens. But Bruce, I really opened my eyes to a few things I wasn't even thinking about, and appreciate your point of view, and never apologize for showing monthly charts ever again. And that's in order.
Oh, well, I just wanted to.
Don't get defensive over being, looking at the big picture. Okay. Everyone needs to do that.
It's such a joy to hang out with you all, and thank you all very much for having me.
Yeah, and you could follow Bruce at RD Wickoff on Twitter. You want to let them know where they could, and stockcharts.com. And Albert's asking about that webinar again. He didn't catch it. If you posted the link.
Well, here, I can just put this back up real quick. Right here, just ifta.org. And the registration should be right on the home page. IFTA is a great organization. It's 20 country societies around the world, and they're all like technicians, traders like all of us. So
they're all Michiganers.
Yes.
Anyway, Bruce, thanks so much, buddy. I'll catch up with you this summer, and always root for you and the people that listen to your work, that their minds and ears are open, because they have a lot to gain if they are.
Dale, just a blast to be here. Thank you so much.
All right, everyone. Bruce Fraser, follow him on Twitter. Go to that webinar and read what he writes if you want to keep yourself on the right side of the track. And that's a wrap. The team's waiting for you guys, subscribers, in 12 minutes for the Morning Edge. And I'll see you tomorrow for the PPI. What could I call it? The purple price indicator. See you guys.